Welcome to this week's podcast. My name's Andrew Wilkinson with Interactive Brokers. Now, the New World Order has changed abruptly in the months since Donald Trump took office. Global political leaders and economists are trying to deal with the rapid changes, not least in China. Helping us understand the response and reaction from within the world's second largest economy is Xiaolin Chen, Head of International at KraneShares in London. Xiaolin, welcome back to the program.
Thank you for having me.
So tell us, how has China's recent macroeconomic policy shift impacted both domestic growth and global economic dynamics?
I think that's a great question. China has been an emerging country for years. That means policies in those countries matters the most. You give the directions of sectors and industries and investments trends also impact a lot of a direct household disposable income. In the last 2 or 3 years, it's become very, apparent that China has been heavily focusing on to its domestic consumption. All the policies centered around monetary and physical of cutting rates, helping the mortgage reduce, even saving rates and borrowing rates for corporates. All those are centered around to say, how can we create liquidity for corporates? How can we create more wealth for the household? Clearly, it's very domestic consumption focused policy. They have been designed or they have been continue to support the market on. Second, high quality growth. Used to be in earlier 2000, if you remember, was everything is made in China. They don't care is what you order, what you want to order. They manufacture anything. But since the last 20 years, they have been very steadily shifting towards high quality in exports, in manufacturing. Also, they want to focus on themselves at high quality growth as well. That's included, in the old industrial manufacturing sectors, one, to automate them, to replace them with robotics, and also to a bit of the other end of, say, as a whole economy, how can we rebalance it to more resilient model than relies on industry in building things to service driven, like the United States, like the United Kingdom, like all those developed countries. So obviously these are big trends happening. Policy also rebalances economy. And the other thing I would mention, and I'll pause there, is all the efforts they put on reduce all the reliance on property sector. You have heard China's correction on real estate. Everyone say, oh, the real estate go down like hell. Yes, I agree. I've been a long-term bear on real estate, but there's a bottom to it. The put policy being activated, I say the fall for real estate sector going to be more moderate, more settled. You will see a lot of actually rebound on certain sectors to go from there. But it's a good thing. They are now less reliance on property sectors and more of a encourage on innovation, on technology. This year, who would have expected DeepSeek? Who would have expected China suddenly introducing all these robotic automation? Who suddenly Alibaba say, you know what, I am going to solely rely on my own developed chip for my AI developing. So I think all these headwinds, challenges, actually China has navigated through them already, and now it's facing a new chapter.
You mentioned technology and innovation there. What are the key drivers behind China's rapid advancements in technology and innovation, and how do they compare to those in other major economies?
Another great question. This is excuse me, almost a topic in any, conferences, interactions you have that people is asking what is happening. And to be fair, on China's governments, at least those policymakers, quickly recognizing, you know what, we are behind. Okay, we're way behind of United States. We're way behind of big companies in Europe designing the IP of the chip. We're way behind that. Then over the last, I say, a few years, 5 years, they say, you know what, we're going to catch up. We have to catch up. It's a matter of national security for the next developments of the next generation. So they have significant, in the big way of billions, if not trillions of dollars they have invested from the government in the R&D and tech infrastructure, period. They're recruiting the talent. If you look around, they actually have the talent. It's really how they use them, how they leverage them. If you look at the big tech company, how many, let's call them Asian face people are there. So intellectually, they are not short. It's how they're going to focus on it, how they're going to encourage, have subsidized all the proper investments allocated to R&D in those sectors, going to encourage them, which they did. For instance, China also have a separate equity board, like us have S&P, NASDAQ, all these, they have another board under their main board of Shanghai Stock Exchange called Star Board. That is a science, technology, innovation. Those China's own NASDAQ. They don't like it, to call it that way, but it is true. It's all those Chinese unicorns that is come forward to say, you know what, we are doing something special, we're doing something different. And then the government says, come forward, list your company publicly, and then I will reimburse your R&D expenses. How is that? So a lot of those programs has happened for nearly, I say, about 10 years already, with those efforts in place for those companies to go forward. This is one thing. And second is really from top down, a strategic focus to say, we're going to focus on AI, we're going to focus on 5G, going to focus on green tech. That is a top down instruction. It's probably one good thing of a country led by one party is the instruction get instructed from top down, and they go and implement. So the whole country was like, you know what, we got to focus on this. So what they have really, achieved is really remarkable for any country to be able to achieve in a short period of time. I think if they compare to other economy, China obviously benefited from the scale of the country offers, also the policy that is coordinated in the country. But of course, they face challenges in the core technology, like the semiconductor, the designs continue to be the case for them to catch up.
Xiaolin, let's turn to US-China trade tensions and the evolving global supply chain influencing China's economic outlook and its role in the global market.
Again, US and China, world number one and number two. Okay, we don't want them to be best buddy as long as they talk to each other constructively, finding a very constructive way, beneficial for both nations to move things forward. It is important. We need a number one, number two for the world order, for this to continue to work, which both sides are talking, which is very encouraging to see. They have had 4 rounds of talk in 4 months of time. Okay, in Geneva, in Europe, in Madrid last week, all the streets are talking, which is important, which a lot of investors feel very encouraging to see both sides putting that effort forward. But domestically, with behind the doors, China is increasingly now pushing for technology self-resilience, okay, self-sufficient, because they know the challenge they face externally. They know this is not a one-off, and they know they have to build up the domestic sourcing. So this kind of actually push them to be maturing, more resilient, more able to come up with more of the sectors that they can be all self-resilient. And some foreign companies also relocating manufacturing, from China out somewhere else. That's a low value chain industries. China is no longer manufacturing cheap T-shirts. They are manufacturing robots. They are manufacturing electrical cars. They are the number one in the solar panel industries. Those are huge take for them in taking the spots in the green tech space, which is a good achievement for them to have done in the last few years. At the end of the day, I think China would have to create more opportunities for work together with global companies, not just themselves winning, of course, but of course it should be a win-win situation. But China remains, I think, is integral, is a center part of the overall global manufacturing.
What sectors or industries are expected to lead China's next phase of economic growth, especially in light of what you just said, its focus on tech self-sufficiency and green development?
A great question. That is what all these sectors booming in China today. Some we already touched base on, like renewable energy. This is continue to be the case, and they're very determined to achieve their carbon goal and continue to roll out of the EVs are now in Shenzhen, like a Silicon Valley equivalent in the United States, a city in China. Shenzhen and Guangzhou are almost 100% the new cars sold in those cities are EV, electrical vehicles. Okay, 100%. The adoption is really quick in China. So that is very encouraging. They continue to push forward in that instance. I think renewable energy, namely solar, EV, batteries, those are continue to be the sector they continue to focus. I think they continue to going to be dominant and lead. For their own domestic markets, is sufficient enough for companies to continue to supply there. But I do say the industries such as electrical vehicle in China do require a consolidation. They are growing. We don't need hundreds EV brands. Okay, we need EV, but we don't need hundreds of Chinese EV brands. Some of the manufacturers are making the cars at a loss, which is not making any economic sense, but they are getting market shares. I think some consolidation would be needed at some point in that industry, but that's going to continue to grow to a certain extent. And also, I say advanced manufacturing and automation in China. A lot of the low labor cost manufacturers are using robots. Robots is everywhere. I mentioned or shared with your audience last time when I was in Guangzhou in the hotel. The normal hotel, not 5-star, not a big chain, they already using robots in the lobby, okay, to serve clients, to welcome you to the hotel, to deliver food. Their little tummy can be opened. The food gets served into their tummy, okay, and then they go to your floor, say, here you go, Andrew, this is your ordered food. It's actually good. If you order some food in the middle of the night, you don't want to put your clothes on and put your pajamas and welcome, open the door. You open the door, the robots get your food, adios, bye-bye. You don't want to see it, right? It's already happening in China. In those industries, even the petrol station, they use robots there 24 hours. They don't need rest. They work and they put petrol on for clients, for customer. It was very automated. I think that you're going to continue to see happening, that they advance the low labor costs and continue to climb up on the high value chain for that. And I think healthcare. China is aging population, healthcare, technology, innovation in those sectors are continue to be self and private hospital are continue to be the case. And I want to mention two last sector, which is the most important sector that is happening in China. It's going to be valid for decades. One is high tech, AI, 5G, semiconductor. It's going to be going to boom. You're not going to only see one deep sea. You're going to see many deep sea continue. Okay. And the robotics, if you go to China, you'll be amazed to see how the robotic humanoid developments happening in China. A lot of the robots being put into home care to help the aging people. Give me a bottle of water, give me my tablet, give me my pill, I'm going to eat it, I'm going to talk with me, switch on the video. All those basic care, they already use robotic to talk to them, to socialize, to interact with patients. It's already in place and implemented. And lastly, what China has the most is all the investors need to access and benefit and invest in is people. China has the most population. Benefit from that is the e-commerce, the digital economy. That's going to be the key for you to hold almost for another decade. The reason I say that is it used to be only 50% of the Chinese population live in the city. We call them urbanization rate. And now it's approaching 66%. The goal is to achieve United States, United Kingdom, like developed market, 80-90%. You do the math. There's another 20 to 30% of the population of 1.4 billion people need to move to city. Say 30%. That's 500, let me get it right, 420 million people would move to city. That's more than the United States population, 330 million. Move to city just in China itself. Imagine the entire United States population will have to move to city. What they're going to spend, what they're going to use, how they're going to serve their modern life. We need e-commerce platforms like Alibaba, JD, all those companies that's in, China, CSI China Internet Index Fund. We have that index structured. Those names are the names servicing household, servicing individuals, servicing the moment 880 million people living in city today, serving them on daily basis. Those are the sector you need to benefit from.
Wow. Very exciting things going on in China. Xiaolin, talk next about the regulatory changes in China that are affecting the tech sector and also investor sentiment. What's happening in that space?
It was quite a hurtful situation back in 2020, 2021, if everyone still remember. Those are like a nightmare time when we experienced a pandemic. And nothing to be laughed about, pandemic at the same time, and they put a lot of regulation on top. I'd say if we still remember those dark time, I look back hindsight, this is really hindsight. When we go through them, we didn't like them. But hindsight, they put the framework like anti-money play, data security, all the privacy, all these things like GDPR equivalents in the UK, we have all in place back then. We're glad they did that because this market is so huge, so massive. We need the regulation to be in place. They did put those all in place back then, which is hurt the market sentiment. But it's comfortable and confident to say those regulations are behind us. Now you see all the regulation clearly outlined is what they're trying to achieve is to get bad apples out, create long-term aims, long-term goals, and create a stable and sustainable ecosystem for the technology. All the regulation introduced thereafter didn't create any market volatility. People understand why they do it. The communication from the regulator clearly getting better. Investors understand what they do, why they do it, and when they expect this to be complete, which I'm pleased to see that they actually encouraging the technology company to come forward and do more IPO.
Now, coming up, we've got the 15th
Mm-hmm.
5-year plan, which would cover the 2026-2030 time period. What can we expect to be announced next month in October?
That is a brilliant question to conclude, or at least to summarize what is China going on at the moment, or what is China aiming at. This 5-year plan is like a New Year resolution you and I have for the new year. And the Chinese government have a 5-year plan for their every 5-year agenda for the government to achieve for the nation. And this is obviously the last one was 14th 5-year plan, which covers until 2025 this year. And then the next one is going to be introduced in October, in a few weeks' time, for the next 5 years, which people is aim on to say, what is your resolution? What is your plan? What is the government focus on? That's why, they probably why you asked me the question is, what is their agenda? Their agenda would be very clear on a few things, and they will be surprised us with a few other things, but few things very clear is technology, innovation, absolutely front and center. Second is the people, the e-commerce, the consumption, how they're going to create more wealth for the people, how they're going to continue to, feed this 1.4 billion people to increase their disposable income for them to continue, enjoying the life they have been. So I think the next 5-year plan would very much centered and focus on technology, innovation, AI, and then healthcare technology, and like things we mentioned, and the people on the job creation, and also the consumer, how they're going to continue to help the consumer, help the household disposable income.
Xiaolin Chen, Head of International, as ever, a huge pleasure, and thank you for joining me on today's episode.
Thank you.
And to the audience, if you enjoyed this episode, please remember to subscribe to our channel wherever you download your podcasts from. Thanks, everybody.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice.